Hi guys, welcome back to the channel. My name is Dave, and at the beginning of 2022, I started investing $100 every single week into the stock market, and I haven't stopped. And now we sit here, 2.5 years later. I want to show you what exactly that looks like. If that is what you're looking for, please stick around. So first of all, why did I do this? I've been investing for 30 years. Why start over and do it again? It's kind of a proof of concept to show people that setting up an account is very easy. Auto investing is very easy. Finding good solid products that you can routinely invest into is easy. You can do this. You set your mind to it. You can find an amount that works for you and set it and forget it and have success. Why did I pick $100? Well, I think that's an achievable number for many people. Maybe you eat out once less per week. You don't buy the fancy coffee. You get the kids to turn the lights off. Maybe you drive an Uber for a couple hours. But I think a lot of people could dig for that $100 to invest each and every week. Investing for the next 40 years of your life can be quite simple. You can set this up for a few hours, set it and forget it, and hopefully you only have to look at it every so often. And we can thank John Bogle for this. He founded the Vanguard Group and popularized the first index funds, which will save us countless hours of research in the future. Index investing will often be people that spend hours upon hours analyzing individual stocks for a living. So what is index investing? It's simply a basket of stocks and or bonds that track a specific benchmark. They can be mutual funds or ETFs, and they're extremely easy to buy and to set up to automatically invest each and every week. So index investing means we're going to buy simple, broad-based products such as the Vanguard Mutual Fund VTSAX or the ETF version VTI. And these are going to be the primary vehicle that, in my opinion, the vast majority of people should be using to grow wealth over the many, many years they have heading towards retirement. So both these products, VTSAX and VTI, contain virtually all the stocks in the US market. They're going to offer you lots and lots of diversification in your portfolio. Now, for all my friends out there that think the stock market is rigged, I offer the following. The S&P 500 has returned over 10% for the last 50 years. Now, I enjoy long, drawn-out jokes. If you've been following along here, you probably realize that. But that's an awful long time to be waiting for a punchline. 50 years is too long. So the stock market is not rigged, especially when we're using broad-based ETFs, maybe individual stocks, but not broad-based ETFs. So start investing. Do it today. Now, there are going to be long periods where the stock market performs poorly. So you have to learn to roll with the punches. It's going to be part of the process. The ups and downs, the recessions, we're going to have those. The worst return for the S&P 500 over a 10-year period was way back in the 1930s, where you could have invested and had a 40% loss. Lovely, right? Terrible, horrible. The only other time that we've experienced a loss over a 10-year period was during the Great Recession, not that long ago in 2008. So you do need to have some time on your side still. However, this chart, which is from the Balance website that studied the return of the S&P 500 from 1973 to 2016 through the Great Recession, shows that with investing time on your side, the outlook is positive once we get over that 10-year hump. Look at the 15-year and 20-year minimum performance. So for this experiment, I decided to use M1 Finance. I've been using it for a few years now with another personal account, but a great way to get started if you're brand new to investing. And I'll have a referral link down below. I use it, so I don't mind promoting it a little bit. I also use Fidelity and E-Trade. Great full brokerage accounts there too if you want to use those instead. You can set this up with anybody, but I think it functions pretty well with M1 Finance. So again, I got started way back at the beginning of 2022, January 11th, and I put $1,000 of seed money in, and then I started putting $100 in every single month. And then at the very end of April, I actually increased it to where I started putting in $150 every single week. So $100 every single week from here all the way to right about here. And you can see where we are at today. So right now we have $16,320.03. We've had a market gain of about $1,950. We've earned some dividends, and we see a money weighted rate of return of 33%. So it's all going very well. If you remember, 2022 wasn't a great year for the stock market. 2023, it certainly turned around. The first half of 2024 has been very good as well. So looking pretty good overall. Now, what do I have in here? Well, I started with the John Bogle 3-fund portfolio that's pretty popular, and that is the combination of VTI, the Vanguard Total Stock Market Index that I was talking about. Great product. And if that's all you want to buy, if you're a young person, you're probably perfectly fine with just that. If you want a little bit more international exposure, you add in VXUS, although I've heard plenty of arguments that VTI is pretty international now with all the different US companies that are spread around the globe. But if you want to have a international component, VXUS is what I used. And then BND for bond exposure. And again, if you were very young, if you're really young, there's probably no need to have that. But if you want to add that to your portfolio later in life, or you want to use it as a way to hold some cash in case there is a significant bear market that we jump into and we drop over 20%, and you want to rebalance and move some money from your bonds into VTI, that would make sense. But that's all you need. You just need VTI to get started. That's all. Just dollar cost average, meaning buy every single week, buy some shares of VTI, $100, $100, $100. And you're going to have a chart that looks just like this over a period of time. Eventually, this is going to get more ragged, right? Because we're going to have more and more money, and we're going to take a look at that and the dividend snowball that's going to occur down the road with this particular account. And I'll show you how it's going to play out. Now, I did gussy this up a little bit more. I added in XLK, XLV, and SCHD. The combination of these three is something that I kind of studied and I'm kind of a fan of. So I added that to my portfolio as well. And you kind of see the targets that I put over here. But you do not need to do that. You could simply buy VTI, set this up, and ignore it. Especially if you're 20, 30, or 40 years old. Just buy that, set it, and forget it. And hope for a decline. I know that sounds crazy, but recessions, all these things are going to be great for you because VTI will be dropping. You'll be buying at those lower values. And if you picture a big U in your mind that is time and it goes down in that U and you're buying along the way, you're going to do really well when we come out the other side of that U and we start heading back higher and higher again. So those 10-year down periods, those are not bad things. Those are part of the process. That's part of the market, and it'll actually help you in the long run. And then I also went and I bought some SPHY. If you can see it down here, some VTEB, which is a Vanguard tax-exempt bond. I spread out my bonds a little bit, but you certainly don't have to do that when you're just getting started. And again, one of the reasons that I picked M1 Finance is they make it extremely easy to get started investing. So if you're brand new, this is what I would tell my son or daughter how to get started. I'd say, go, use this link below. Set up your account, routinely invest, set an amount, and set a time. I do it every single week, but you can do it once a month. And I would say, don't even worry about all these 8 slices. Don't get all fancy. Just buy this first one. VTI, set it and forget it. Pick your amount, and you're off to the races. You're going to do great over time investing with this one product because you're so young. You got so much time on your side. So very simple to use and a great way to get started. There's also lots of YouTube videos out there that can show you exactly how to get fancy with M1 Finance if you want to go a little bit deeper. So people see my results so far after 2.5 years investing $100 every single week. They're thinking about the sacrifice they've got to go through, and they're like, hey, you just got $16,000. What's the big deal? Well, the big deal is that we're working towards what is very popular right now. There's lots of videos out there about the dividend snowball, or basically investment snowball is probably what it should be called. But I put together a spreadsheet here to kind of show us what it would be like if you started way back in 2024, right now, at the age of 25. And I picked an annual investment of $5,000 every single year, which is $200 short of my $100 a week, right? 52 weeks in a year. That means we put in $5,000 at the start of the year. And if we said every single year we're going to get 10%, I know it's not exactly that, but historically the market returns around 10%. So I went with 10%. It's actually a little bit over that. So we'll see. But there's definitely going to be ups and downs and periods where it's not giving you 10% in years like 2023 where it returned 25%. So there's going to be ups and downs. So your gain year one would be $500. That gives you $5,500 altogether. Yay me, right? But this starts to compound over time. So year two, again, we're going to put in $5,000. And that gives us a total of $10,500 because we had a $500 gain. So then at the end of that year, $11,550. And you can see as this goes on and on and on what happens. And we scroll all the way to the bottom here. We're going to get very excited when we finally see that at age, or 40 years later, at age 64, starting again at 25 to 64, this is what everybody likes to show. The year 2063 for young people out there. We're still putting in $5,000. We haven't adjusted for inflation or anything like that. That would certainly give you a bigger total return overall, or a total bucket of money at the end. But we end up with over $2.4 million. And that's what you should really be focused on. If you're a young person and you're like, $100 a week, but I don't get to go to dinner on Saturday night, well, you're going to end up with $2.4 million. You're going to be feeling pretty good down the road by giving up pizza night. But what we're really trying to do here by investing $100 every single week is to kickstart the compounding effect that we're going to have in this account as the years roll by. So you've probably heard of the dividend snowball or the investment snowball, and that's what we're going to look at now. So year 2031 is the very first exciting year for me, right? We put in $5,000, but you're going to see that our gain from our previous investments is $5,717, right? It's starting to do some of the heavy lifting. And as the years roll by, this is going to have a bigger and bigger effect. So to get to $100,000, this is going to take us a full 11 years. But once we get to $100,000, really, that snowball starts to have a bigger and bigger impact. So the next $100,000 to get to $200,000 only takes 5 years. And if we roll all the way down here to year 2055, this is how this snowball takes place, right? In year 2055, we're putting in $5,000, and our gain from our investments at 10% assumed return is 20 times that, over $100,000 every single year from 56 all the way down to 64. $100,000 every year or more is being contributed to our account by that $100 that we started investing with 2.5 years ago for me. So we'll see where we end up. But don't underestimate the value of compounding interest. That's what's going to make you wealthy in the long run. Bottom line here is investing does not have to be difficult, but we can make it very difficult. You can watch my video, my top 20, like and subscribe. You can see how difficult I've made my portfolio. I do options and everything else. If you want to learn about that, like and subscribe. But it doesn't have to be that way. We can keep it very simple. We can follow Mr. John Bogle's advice over there at Vanguard and just index invest. It's proven that it'll outperform the vast majority of everybody out there, the experts, the analysts that spend hours and hours analyzing single stocks. Just do that. Keep it simple. Enjoy life. Like and subscribe. And if you have any questions about this, ask down below. We'll see you next time. Take care. Boop.